Hello everyone, Greg Diamond here with another edition of Diamond's Edge. And in this week's video, I'm going to talk about some textbook Elliot Wave price action. I'm going to incorporate time with that. Time and price are a staple of my trading strategy. And I'm going to show you kind of how this is playing out, where time and price come into play, and then what we can do about it. All right. So I've been warning 10 stock trader subscribers about the next GAN time factor window, and that was July 12th, which started on Friday, and that lasts into this Friday, July 19th. Now, whenever you hear somebody talk about time, some people just blow it out of proportion. Oh, it's going to be a huge top. Oh, it's going to be a huge bottom. That's not necessarily the case. It can be a pause in the current trend. It can mark some sideways price action. Yes, it could mark a big breakout or a big breakdown or a major top or a major bottom. Where I think some analysts come up short, some traders come up short, is that you have to incorporate price into what time is doing. And that's why I think Elliot Wave is such a huge part for technical traders to understand how price action plays into these time factors. Okay, so I want to take the S&P right here, and this is a perfect example of what I'm looking at. Okay, so I have this is a 3-day chart or 2-day chart on a 1 minute time frame, and I just labeled this here 1, 2, 3, 4, 5, right? Boom. And then on Friday afternoon we saw a huge sharp sell-off right after that 5 waves. That's 5 waves up, 3 waves down, is the general over, very, very basic Elliott Wave. It can get advanced. This is the basics, okay? Now, let's say that this low holds and we get another rally. I can't rule that out because, again, we have this time factor window from the 12th to 19th. Sometimes, especially tops, you never really know if it's going to mark a top at the beginning of the time factor window, at the end of the time factor window. So you have to take in these accounts. But again, it improves your probability. I always say that. It improves your probability of success and how you want to trade it. Do you want to get aggressive? Do you want to sell short? Do you just want to take some profits? Do you just want to sit back and do nothing? These are the things I'm constantly asking myself, regarding our trading, regarding our positions, regarding the risk reward, regarding time and price of what I think could happen. And what I think could happen is based on these probabilities. Okay, so this is the short-term chart. Now let me switch over to the daily chart of the S&P 500, and I'll show you what I've been looking at. Okay, so here is again the daily chart, and what I want to show you here, there's a few things I want to show you. First, this is the larger wave count, 1, 2, and then I've subdivided this third wave, 1, 2, 3, 4, 5. All right, you can see this fifth wave. You can see right here, all right, and I'll zoom in here. You can see on Friday it marked, it rallied into the upper resistance level, made a slight new high, and then reversed based on that, that 1 minute chart that I just showed you. So the other thing I want to show you is the RSI and composite index. Okay, now you can note here I have 3 higher highs in the RSI, 1, 2, 3. Overbought clearly. Okay, it's about just north of 80. Now look at the composite index relative, and this is something that I highlighted to subscribers last week. All right, 1, 2, 3 lower. All right, so you're seeing this divergence between where RSI is making higher highs with price. We have what looks to be possibly a third wave high into this time factor. Okay, and at the same time the composite index is showing negative divergence. So this is a scenario where it's like, all right, I'm taking caution here. And this isn't a situation where I say go out and short everything. Okay, that's not what I'm saying. I'm not saying this is going to be some big crash. To me, this appears to be a pause in the trend. So what would that look like? Okay, let's assume for a second that Friday marked a short-term high. Then what we'll likely see is this fourth wave here. Okay, something like this. And fourth waves tend to be tricky. They can be bounced. They can trade just below the lower level of resistance, or support, and then trick everybody. Oh, this is going to go bad, and then we shoot up into this fifth wave. All right, let's take something else into consideration. So the S&P made a new high. Okay, look what did not make a new high. This is the Nasdaq. All right, so you can see here the closing high was actually on Wednesday. Thursday we had the big down day, but the Nasdaq could not make a new high with the S&P. Again, it's possible that we see this rally. And what would that look like? All right, so I'll just do the NASDAQ here. So maybe we have a situation like this. All right, so into the 19th, which is something like that. All right, so again, and that's what this would look like in terms of the short-term Elliott wave count. 1, 2, 3, 4, 5 into the 19th, which is this Friday, and then we get the fourth wave correction. I'll show you on the S&P just to make it a little bit clearer because I have those counts on there. But this is, these are the scenarios that I like to see. All right, so let's take the opposite. Let's say that this does last a little bit longer, right? So whatever, we get a drop, and then we start to see maybe we get like what's called a throwover. You get a big rally above the resistance, and then you drop down into the fourth wave correction, and then you get the fifth wave. Again, this could be choppy, but this is a scenario where I take time and price and then look to see what's happening. I mentioned NASDAQ did not make a new high relative to the S&P 500. The semiconductors as well also did not make a new high, right? So you can see here I had the 12th and 19th already marked in this chart. SMH did not. SMH is obviously, semiconductors are obviously leading here, right? So we get a correction, and then the rally, a fourth wave correction, and then a fifth wave rally. Here's something else to consider, okay? Here's this U.S. 10-year interest rate. Obviously, I've been focused on interest rates for a long time, given inflation and what the Fed might do, and this matters. Again, you can see here, as I pull this up, I already had the 12th and 19th highlighted, all right? Does this mark a low in interest rates and a high in stocks, and then we see another bounce over the next 2, call it 3 weeks. So it would be something like this, right? Again, let's say, rates drop and stocks have one more pop in them this week, and then we get, some messy price action in interest rates higher, stocks lower. You can see here we have this resistance level here, and then we get another drop. So all these things are starting to come together for me in terms of, whether it's a short-term top, it looks like a third wave high, whether that was on Friday, confirmed Friday, or happens into this week, then we get some choppy price action. The Federal Reserve meeting is late July. We have earnings starting to come out. So this is something that I'm really keeping an eye on that I wanted to share with you because it's textbook Elliott Wave into important time factors. Thank you very much. I'll see you next week.